Born Before 64 is a TV show that asks the vital question, what will we do for the rest of our lives? Kathryn Raaker hosts a show for baby boomers and above, inviting real people to tell real stories about overcoming issues, about facing with courage and triumph the significant obstacles many of us face every day. Born Before 64 TV shows will cover topics that this generation is interested in. So let's join Kathryn Raaker for Born Before 64.
Hi, I'm Kathryn Raaker of Born Before 64, and I want to welcome you to our show this evening. It's all about managing your money and understanding everything that you need to know about investments. And I want to welcome to our show tonight an expert with over 40 years of investment experience globally.
Yes.
Dan Perkins, I want to welcome you to our show. We've met you on other occasions for your being an author, but tonight we want to talk to you about, you're still an investment advisor, am I correct?
Absolutely.
And you specialize in finding investments to meet people's needs, am I correct?
Yes, ma'am.
And tell me, you know, to me, it's a real challenge in today's marketplace. You really don't know what to do. And for most people, the challenge is where to put their money today.
Well, I totally agree with you. I think that my industry, Wall Street, has created such a proliferation of products that are, for the most part, not driven for the benefit of the customer, but driven for the benefit of the brokerage firm that, or the investment bankers who put it out. It's the proverbial trying to put a round peg in a square hole, and it's one of those reasons that people lose money is because they don't understand what they're doing with their money. And the people who sell them the products for investment don't take the time to teach them to understand what it is they're doing with their money.
Mm-hmm. And you know, it seems to me that there's so many investments out there that are so confusing. And to understand everything from mutual funds to bonds to gold and silver to, because it's constantly bombarding you on everything that's on television, on radio. There's so many different people that are gurus of, you know, finance that I at times get really upset with listening to them. And so I tune them out and I go, I don't want to not be able to use a credit card, or some of them are to the point where, and it really drives me crazy, especially, and I'm not going to mention any names here, but somebody, yeah, well, but he filed bankruptcy and now he gives investment advice, and I'm going like, that doesn't make sense to me. Why would I even believe him?
Well, he's probably promoting the fact that he went through bankruptcy and came out on the other side, and so he can help people. That's a very small, very little niche situation. There are a lot of people that are dealing with bankruptcy because of they're underwater with their houses and their mortgages and credit card debt, and they really don't know what to do. But the earlier issue that you raised about so much out there, if you understand that there are over 7,500 mutual funds, 7,000.
That's a lot.
It's a lot of mutual funds. So how is it possible, one, to distinguish one from the other? And if there are 250 mutual funds in, quote, say the growth category, do you depend upon Lipper or Morningstar to figure out which one you should buy? Do you depend on your broker or your financial planner? So the expansion of product has grown quantumly over the ability of the consumer to understand what those new products are. You know, I used to do a presentation when I was helping Citibank get into the distribution of financial products. And I went into a branch to do a meeting with 40 or 50 brokers, and I opened up my briefcase and I took out a pair of little girls' black patent leather shoes.
Oh, really?
And I said, this is what your customers want to buy, because they can understand a black patent leather Mary Jane shoe. It's simple, it's one color, it's got a strap, But we've complicated all of these mutual funds and alternative investments, or strategic investments as they're called sometimes. There are investments out there today, Kathryn, where you're placing a bet, and I literally mean a bet, that the market will only go down so far or the market will only go up so far. And if it trades within those ranges, you'll make some money. But if it trades outside of those ranges, you're going to lose your shirt. There's a fundamental problem, though, that I think is going on. And speculation on the part of consumers has increased dramatically because for now 5 years, this month, money market mutual funds have paid zero.
So why invest in them?
I asked the same question. When Mary Shapiro was the chairman of the SEC, I wrote a white paper for her, actually 2 white papers for the SEC, that asked that very question. Why are we allowing the government to sanction a mutual fund investment that is guaranteed to lose money? Because if you don't make any money in a money market mutual fund, which you're not, zero return, then you're losing money, because even if inflation is low, you're losing money to inflation. And yet, for 5 years, the Securities and Exchange Commission has allowed people to continue to market money market mutual funds at zero return.
Well, my question is right there. Who's making the money then?
Well, that's another article that I wrote for the Securities and Exchange Commission, because what's interesting, the structure of a mutual fund says that you pool a bunch of investors together, you hire a manager, and there's an oversight board who makes sure that the manager is supposedly making sure what the manager is doing. Okay? Now, those independent directors who are supposed to represent our interest are paid. They're an expense of the fund. I wrote to Mary and suggested, how is it that the directors of money market mutual funds are getting full pay and the shareholders that they're supposed to represent are getting nothing?
Well, and then here's the other question. Why didn't they put them on a commission basis instead of paying them?
Because the commission is a transaction fee for the execution. The board of directors for the mutual fund, money market or whatever, have a fiduciary responsibility to make sure that the managers is doing what they're supposed to be doing. But see, that's another problem. You probably have viewers who came through the crisis of 2008 and 2009 and saw their accounts dive.
Right.
And in many cases, they haven't recovered back to where they were before the beginning of 2008.
Don't you think that there's no confidence in the situation with the markets?
Well, I think but the Dow and the S&P continue to hit new highs. The problem, Kathryn, is that the people who own money market or own regular mutual funds, bond funds or own growth funds, some kind of stock funds, they expect certain things from the money manager.
Okay.
And usually in a prospectus, it tells the investor what's the benchmark. Is it the S&P 500? Is it S&P 500 large cap, small cap, medium cap? What is the benchmark? In the case of international investments, is it EFA, which is Europe, the Far East, and Asia, as an index? 65% of the managers out of that 7,500 universe we talked about earlier don't even meet the performance of their benchmarks.
And on that note, we need to give your website out because we have to take a short break and we'll be right back. Yeah,
I have a blog that your viewers can look into, and it's called Money in Motion, and the web address is www.moneynmotblogspot.com.
All right, and we'll be right back on Born Before 64 with Dan Perkins, our expert financial advisor.
Thank you.